Precious Metal Summit 2019 here in Zurich. Ladies and gentlemen, welcome. And now with me here is Equinox Gold, and Greg Smith, the president of the company, wants to give us an insight and, of course, update about the terrific production numbers. Welcome, Greg.
Thank you. Thanks for having me.
Yeah, great to have you here. And I was already checking on your Q3 numbers. Before we come into that, you guys have now 2 mines in production and 1 in development. Maybe give a short overview on the company.
Sure. So we've been building Equinox over the last couple of years with a focus of building a multi-mine precious metals producer and a vision of getting to 1 million ounces by 2023. And so if you went back a year ago or just over a year ago, we had no production. We then acquired the Mesquite Mine in the last year. We brought our Aurizona mine in Brazil into commercial production in July. And we recently announced that we're building our Caste Mountain mine. So 2 mines in production right now, a 3rd mine in construction, and next year at this time we'll have all 3 mines operating.
Fantastic. As you had just out your Q3 numbers, maybe you can comment a bit on that, because they looked really healthy, I would say.
Yeah, so this was the first quarter, Q3 this year, where we had 2 mines in commercial production, because we announced commercial production at Aurizona starting July 1st. And it was great because we hit a good gold price, we hit a good real in Brazil, and Aurizona performed really great. It ramped up quickly, it's operating the way we wanted to. And we had over $90 million in revenue. We had almost $40 million in operating cash flow. So very, very happy with the results.
Fantastic. And I thought you also had no lost time injuries, because that's also not, I would say, normal when you ramp up and you go in commercial production. Let's say all the time something can go wrong, right?
We've had a very good safety record and want to keep it that way. And in fact, our ESG reporting is something we're actually going to improve quite a bit next year. Not what we're doing, but what we're communicating to people. And we'll have a first sustainability report coming out, I think, in Q1 or Q2, and making that more of a focus in our communications to shareholders as well.
Fantastic. Let's start with Brazil, Aurizona mine. So what is the plan, let's say, for 2020? What do you want to achieve?
So now that we're in commercial production, we're actually turning back toward exploration. So the Tatajuba target is the extension of the Piaba pit toward the west. That's where we really have the opportunity to double this mine life. And so we just mobilized 2 drills in September. They're drilling now. Hopefully we'll start having results come out early in Q1. And ideally we can start to integrate those results into a resource update at Aurizona that will include Tatajuba. So that's part 1. We're also looking at an underground mine at Aurizona below the Piaba pit. We've done some internal studies. They look great. And so next year, in 2020, what we'd like to do is release to the market a full PEA on an underground mine at Aurizona that we can then incorporate into the overall plan there.
Fantastic.
So lots of exploration.
Which you need for the mine life, of course. That's for sure. So what would be then like a production target 2020, 2021 for the mine? Annually.
For an underground? Oh, you mean for the whole mine right now?
For the whole thing,
yeah. I mean, on an average year, Aurizona will do between 130 and 140,000 ounces.
Nice.
So this year around 75, but then that has potential to double next year. So.
And where do you see the costs, AIC-wise? Roughly.
Yeah, life of mine is between 750 and 800. They were a little higher last quarter because we were still kind of in that construction mode, just finishing up construction, but they should come down next year.
Fantastic. Then let's come to California, to your second mine, Mesquite.
Mesquite.
So what's going on there?
So Mesquite is a mature mine that we acquired a year ago. When we bought it, had about 3 years of mine life left. We're now a year into that. So a big focus for us is looking for ways to extend that mine life. And what we've been doing is doing drilling of historic dump material, which is actually ore grade today with a higher gold price, higher cutoff. We're doing in-pit drilling, and then we're going to be doing some drilling in the Brownie section of the pit so that we can start looking at what a pushback would look like in that direction. We're also doing permitting for leach pad expansions and some drilling across the highway. And all of those things will start to come to fruition sort of over the next year.
Fantastic. What is the production target there for the next 1-2 years?
Well, guidance will come out next year, but historically, Mesquite's done between 120 to 140,000 ounces.
Okay, so that would bring you all together already to 250,000 ounces.
Yeah, next year we should be between that 250 to almost 300, because mid next year, we expect to have Caste Mountain Phase 1 come into production.
Exactly, that would be my next question. Caste Mountain, so what's the take on that?
So we recently announced that we've commenced construction, Phase 1. Phase 1 will be a very simple open pit heap leach project, do about 45,000 ounces a year, $58 million capital expense to build it. And we've started that now. In fact, we've got liner on site. We're going to be laying liner this month. So it's moving quite quickly. And then next year, once we've got that into production, sort of in parallel, we're going to be doing a full feasibility study on phase 2 that would expand the production to 200,000 ounces a year. That'll come out next year, and that'll form the basis for permitting that expansion. We want to be at that runway by 2023, so we got to move quickly here. Get that fees done, get that permitting started.
Okay, and Caste Mountain, what do you think this will be a annual production then?
So phase 1, 45,000 ounces. Phase 2, over 200,000 ounces.
Whoa, okay. And that will bring you to the 500,000.
It brings us very close.
Okay, yes. Fantastic. You just said you want to invest 58 million. I think you also have to do some investments on the other mines still. Can you finance all out of cash flow?
Yes. So right now for Caste Mountain phase 1, everything we're doing at Aurizona, Mesquite, we can internally finance with cash on hand and cash flow. For phase 2, we'll have to look at what that looks like, several years from now. Part of that certainly will probably be equipment financing for the fleet, because that's a big part.
Which is not a problem. Yeah. Okay. Yeah. Super. Great. What would be the drivers, and I call it a catalyst, if you want, to bring you really to a 1 million ounce producer? What's the plan on that?
Well, we can get halfway there with our existing asset base.
Exactly.
We believe.
Yeah.
To do that, to get to that 1 million, we really need to acquire more assets. Okay. And so that's a big part of what I do. We spend a lot of time looking. It's a lot easier said than done to find things that we want to buy in a place we want to be at a price we're willing to pay. But we're always looking, and certainly it's a part of our strategy longer term here to grow the company.
Fantastic. If we look at on a, let's say, complete consolidated basis, let's assume all 3 mines are running on full throttle, full production, everything goes the fine way. 500,000 ounces per annum is realistic, what we just learned. Where do you see the all-in production costs, roughly? I know it's a forward-looking statement, but just to give our viewers an idea, because with 500,000 ounces and a gold price maybe 1,600
can generate a lot of cash.
Exactly.
Yeah. I mean, we're very focused on keeping our costs as low as possible. I think if you looked at even our G&A as an example, has to be in the lowest quartile per ounce produced. I mean, we're very focused on that. Certainly under $1,000 all-in sustaining costs. Yeah. All of our mines screen well below that. And we're going to definitely try to hold that line, of course.
Fantastic. Any plans on a dividend for the future?
I mean, we eventually want to get there, absolutely. Yeah. And you've probably heard Ross say that he built Pan American silver, and silver he wants to build the same thing in gold, and Pan American pays a dividend, and I think we'd like to get there. No time soon, but eventually, absolutely.
Fantastic, like it. As a producer, how would you consider the gold market today? I mean, as said, around 1,450, 1,500 we are. With what prices you are planning or forecasting for the next years? What is your view or your opinion on that?
Yeah, I mean, long term, we're gold bulls at Equinox, and we think gold has a long way to go. We manage our business on a lower gold price, so we model everything much lower in that $1,250 to sort of $1,350 range.
Conservative. Yeah.
We really focus on costs. We want our company to be profitable at lower gold prices, but then sort of reap the benefits of a higher gold price when it comes. Very happy at $1,450 today. That's a great gold price to be operating in.
Absolutely, and spits out a lot of cash and profits, I would say.
Exactly.
Super. Greg, thank you very much. It looks like a fantastic growth story on the one hand, but really profitable. And what I really like is the fact that you have, let's say, the debt under control, and also for the new investments, you use the cash flow.
Absolutely.
That is fantastic. Yeah. That's how it should be.
That's how it should be.
Well done, I would say. Thank you very much.
Thanks for having me. Appreciate
Thank you. Yeah, ladies and gentlemen, it was Greg Smith, the president of Equinox Gold. And you heard it, 2 mines in production. The third one is really on the making, on the run. And by end of next year, really 3 mines are in full production, commercial production. And it looks like 500,000 ounces, 2020, 2021 is very, very likely at costs well below $1,000 AIC. So at that gold price, this lovely company spits out a lot of profits, cash flow, and real money. That is important. And as we all know, Ross really likes dividends, and so hopefully for the future, this company will pay also long-term dividends. So check it out. It's really a great company. Thanks for watching us, and bye-bye from Zurich.